morning, everybody. This is John Seville from Acorn Wealth, and here's your intraday executive summary update. All right, so the S&P 500 has been obviously had quite a precipitous drop yesterday after it broke out of the open range of December. Obviously, we had that seesaw day on Tuesday. We continued yesterday and dropped right down here to a low of 2024. So today, so far, you can see we're just rallying back up. We're on an inside day so far, so we haven't made a higher high, we haven't made a lower low, and we're just breaking up into that resistance line, which you can see has been set from this trend for quite a while. So we broke through that, heavy volume on the breakthrough. We're rallying up to retest that. So this could be a great opportune time to tack on shorts. We could also be looking at some kind of top end resistance here. If this was a very steep head and shoulders, that would mean bad news for the market. That would mean quite a continued drop down towards the 2019-80 level, but we're just speculating at this point, but it's just good to be aware of those things. Anyway, so far we're rallying into resistance. So I'm looking at a couple of short opportunities of companies that are yet to break. One that came across my board was Adobe. Now Adobe, of course, had a really nice rally. It's recovered from $58 all the way up to 74. And if we have a look at the money flow, however, it tells a different story. The money flow has been rallying up towards this point, but throughout the second crest, the money flow has actually been pulling back, and now, in fact, in distribution mode. That's the word I'm looking for. And if we have a flip over to have a look at where the insiders are going on this tells another interesting story. Quite a lot of insider selling just in the recent months, all the way back to August. In fact, we can see that there's broad-based selling from all the different directors in the company, the SVP, President and CEO, Executive Vice President, CFO, Assistant Secretary, you name it. We go to the institutional transactions, and we can also see that we've got institutional selling all throughout the year. So a bit of a not the best signs you could see if you're looking to be looking for strength. Now, Adobe actually reports earnings after market today. So they, for those who like to play those speculative option plays, there's opportunity there. We've also got a potential head and shoulders as well, which I think is fairly well formed now at this point. So what I've been looking for is trying to get a rally up into the 72 area, or even to this high of the candle here at 71.90 to tack on a short. So I may play a tiny small option play here, but I think in terms of looking at puts, but what I'm going to be looking at hopefully is maybe they have a good quarter and they rally up into this 72 area, and ideally that's where I'd be looking to tack on a short, is if we can get a little bit of a pop on good earnings or mediocre to good earnings, and then tack on the short at the top of this right shoulder. And then I'd be if that could play out, then we could get a nice continuation from 72 to this 66.60 area. Well, 666 isn't always a lucky number either, but you get my point. All right, so there's one. The other one that I'm looking at is Whirlpool. Now this is more of a momentum play, and they've also had a bit of a rough time. They've had a great rally, and they've really done well, obviously reaching up into the highs that they're currently at. But they've also been collecting some insider selling of late, not as broad-based, so therefore not something I would consider as meaningful. On the institutional side, nothing much there either. But what this more so is looking at a momentum breakdown after such a really long run. Going into Christmas, people are more likely to be buying, kind of different type of consumer items like apparel and so forth than they are going to be with Whirlpool, a new fridge or so forth. So what we're dealing with here is it's not yet broken. It's not something I'd short yet, but what I'm looking for is a break of this support area, which is where the 20-day moving average is, as well as the support line here at 182. You can see that's the high of the candle back here at 182.34. If we can get a confident break, and by confident I mean a break of this price coupled with strong volume, then this could be one of those momentum down trades or capturing the crash type of trades where the rally's broken its back. The last stock on my watch list for shorts is Flowers, so you may have seen that on my screen before. This has got very strong divergence in the money flow. You can see this has been pulling down quite a fair bit. It's now also in divergent territory or distribution territory. It's just breaking the support line, it seems now. So I'm going to be watching this very carefully today and tomorrow to see, again, looking for that kind of a break of this 750 support level, or the low of yesterday's candle, and then that could be a free fall from there. The volume down yesterday, it's not a very high volume traded stock, only 308,000 yesterday, so it's not as big board as some of the other ones, but nevertheless there's something to watch. So that's your executive summary for today. We'll be reviewing these in full detail in our trading room tonight. If you're not a member of Trading Room, make sure you go to acornwealthcorp.com and click Contact Us and request a trial, and we can pop you into the lesson so you can see what we're all about. Well, with that, happy trading and have a great week.